and welcome. You're watching the Business Today show with me, Sakshi Patra. First up, the top news we're tracking for you tonight. There are forces working against us, says Vedanta chairman Anil Agarwal. In an exclusive conversation with Business Today television, adds his company is more than able to repay all debts on time. Blames some lenders for driving up interest rates. Another exclusive conversation with NSE MD and CEO Ashish Chauhan, who gives his investment advice to new investors and also talks about increasing volatility in the markets. Finance Minister Nirmala Sitharaman's big thumbs up to the inclusion of Indian gilts in JP Morgan's Global Bond Index, says expects foreign inflows of $23 billion, capable of funding over 10% of the government's market borrowing. Market surge on positive cues with banks, IT and realty sectors driving the gains. Sensex up over 400 points while the Nifty ends 110 points in the green. Big relief for policymakers in India. Crude oil prices fall sharply by over $5 to $86 a barrel mark. Macroeconomic headwinds said to be leading to demand concerns. Fall in prices despite announcements by Saudi Arabia and Russia that they will continue to do output cuts till December. Chairman of India's largest bank, the State Bank of India, given an extension of another year, Dinesh Khara, to continue in the top post till August of 2024. And straight on to the top story tonight. Vedanta Group will not default on payments to bondholders or shareholders. That's a personal commitment the group chairman Anil Agarwal has made to Business Today television earlier today. The 69-year-old entrepreneur has blamed forces working against the group for casting doubt for its repayment abilities and also said some lenders were also trying to drive up interest rates. Here's a part of the conversation Mr. Agarwal had with Business Today television's managing editor Siddharth Zarabi.
I'm sitting in London. I raised $35 billion, invested in India, never defaulted. It is the largest taxpayer in the country. We have paid last 4 or 5 years almost $7-8 billion to the government. Tax, we created value for Hindustan Zinc. Anything we put in, there is a win-win. Government is benefited, so they can use that fund. Huge employment has been generated, never defaulted. So we are getting into the foray of this. We have over $20 billion of revenue. We make $5 billion of profit. Anything around 20%, 25% less than that profit, we are not in that business. So people always, there are forces which work where they say, let's talk about, say they don't get funding for the semiconductor, they don't put into the glass. But I can tell you the other side, the whole world want to associate with us, whether it's the American, we have proven people. We have raised money in this market. So I have no doubt that we will keep moving forward. If you go and look at the market to buy bond in the market, you can't get the bond. Vedanta bonds are not available. So there is a people create this situation whereby to make sure that and this is the part of life. This is a part of life. I'm very confident. We have a people, we have a team to go on. $3 billion, what the maturity is there with the internal resources and to have the refinancing. We are very comfortable that everything will be in place. Never it has happened, but some people has a habit, so they want to lend money to us at the expensive price, so they may be creating this. I'm just assuming But as far as we are concerned, we have an amazing cash flow, very, very good business, fantastic workforce, and the best of commodity and the product. So this is what our story is.
Mr. Agarwal, you made several points in that answer, and since you spoke about tax, I just want to inform our viewers that there's some news that has just come in about tax refund, 190 crore, but just as an indicator to what you spoke about being one of the highest taxpayers. There's also news, Mr. Agarwal, which says that the group is in advanced talks with JP Morgan Chase and Stanchart to secure a 3 billion refinancing facility. That news has just come. I want you to comment on it and also explain to our viewers that is this refinancing that you are considering or restructuring some of those bonds that are due soon?
Yeah, refinancing and restructuring the same thing. And we have our own fund also. So combination of that, all payment, we have been doing this last 20 years, restructuring, paying from our, because it is a cycle. We are expanding our business, we borrow fund, we raise equity, and make sure our shareholders are happy. So it is a process. And one thing I can assure to all our bondholder, all our equity holder, that I'm very conscious that for me, nothing is more important than my shareholder and my bondholder. And this is my personal commitment that there is absolutely no question that ever there'll be a problem will not making our payment on time.
Okay, that's a fair point that you make regarding your bond repayment plans. By when do you expect to provide, sort of finalize this and announce it? Is there a time frame that you can share with viewers?
It is a machine which keep working inside the company, and the due date, we have one payment is due on January, which is another 4 months. Another payment is due in August, which is about 9-10 months. And we are it's every day. It is a machine which, as I said, which work on the basis because we have expansion plan, we generate a lot of cash, and I have no doubt. But this company is going to be. This is a company which is going to be institution for 500 years. This is the ambassador for India, whereby we need more and more company like this to come in India to produce. I'm looking for more competitor to come, but I did not need to announce because as and when it get dues, we will make the payment.
Absolutely. Mr. Agarwal, for years you followed a strategy of consolidation. You have told us about how much funds you have raised, and you've done that pretty successfully. Now, through this demerger, what is the broader philosophy that is at work here? 6 different business verticals. It is obviously positive for equity holders, and that is being reflected in the share price. But what's the broader medium-term, longer-term goal through this demerger?
6 company, my vision is each company will be like Vedanta, size of Vedanta. You can imagine that the person who has a 1 share will get 6 share. So he'll have a lot of flexibility. He can keep all the share. Look at, we are the largest dividend payer probably in India and the most of the world. And we are very conscious that we must pay the dividend. And 6 company will have their own CEO. And the CEO will also, management will also have skin in the game. So they will be like a partner. They will be like a stakeholder also in the company. So this is how we are looking at. So company should run by the best of expert. We got for the aluminum, the CEO, the top man of Alcoa. We got the Goldfield CEO who is working We have a best of CEO for our zinc business. We are getting the world-class silver CEO. Silver, we'll be producing largest silver of the world in India. Recycling is a very, very good business. We are looking forward to have silver to produce in Zambia. We have a huge deposit of cobalt. So we are looking how do we make sure the cobalt being produced. We have a nickel. We are the only producer of nickel in India. You name things. If you look at, we are the renewable energy. We have one of the best renewable energy. We have a transmission business. Right. We have optical fiber. So these are the business. Each business should have its own, because demand is so high and we are the only producer. We are very exclusive.
The MD and CEO of the National Stock Exchange has warned retail investors from trading in the markets. In an exclusive conversation at the India Today conclave, the veteran technocrat also said that volatility in markets is bound to increase and intraday trades should only be made by those who know the system closely.
We have just now around 8 crore plus investors, unique investors. Those days we had probably few lakh investors. Today 8 crore. Investors is around 5 crore households, which is 17% of India's population, household population, directly investing into Indian stock market, which is a very large statement. And it has gone up literally 3 times between 2019 or 2020 early and 2023. Literally 3 times in 3 years. No such sort of move happened except in Jan Dhan Aadhaar Mobile, where government forced large number of accounts to happen. Here, it happened pretty much voluntarily. A lot of people came in, and as you said, there are people wanting to make quick buck because that is the exciting part of markets. That is the, in some ways, hidden situation where people think they will be able to make money, although other people may lose money. So what we try to tell them all is that if you have to trade, then you have to be an expert. What is trading, right? What is investment? Investment is that if you buy a share after study, whether the company or the industry or the economy or the world economy, and buy a share for a company, then stay there for 3, 4, 5 years. Of course, you keep on watching, come out in case it's not working out. But if you have to buy in the morning and sell in the evening and you call yourself investor, then I think you understood the dictionary wrong, right? It's a trading, it's speculation. So we try to tell the people that buying in the morning or selling in the afternoon is for the experts who provide you this kind of liquidity, but you should not be doing that. Similarly, many young investors want to, or young traders want to go into derivatives because that give you much more leverage and they move fast, right?
In fact, that's something I wanted to ask you about. A recent SEBI study has also found that 9 out of 10 people actually lose money in F&O. And here we are talking about extending trading hours also for F&O. So how does that sort of work out?
No, it's again, both are, in a way, you may think it is connected. But basically, retail investors should not be participating in derivatives. Now, having said that, the longer hours are for the sake that in case the news happens, because today we trade only 6 hours. The rest of the world started automating after us, but they all run 24 hours. Why? Is because news doesn't happen during the market time only. Some news, some war coming out or some earthquake happening doesn't have to happen between 9:15 and 3:30. It can happen at 8 in the evening or it can happen in 7 in the evening. So when people want to work on a news, they have no choice. Foreigners have a choice because Indian products are traded abroad also. So that's where they are able to hedge their products. But we are trying to tell, or some of us are trying to tell that because I want to be in front of the screen every time the market opens or market stays open, market cannot go beyond 6 hours. Otherwise, I will get tired. So that's why you cannot go about 6 hours. So I say if people are losing money in some ways, idea is to take them out from that market. But strategically, which country will allow its most important asset today? $3.8 trillion is 1 out of every 3 rupees Indians consider as wealth. 1/3 of India's wealth is now represented. And if 18 out of 24 hours, the pricing of that asset is done under some other regulator, we are having a strategic problem, boss, right? And that's where, as long as possible, if you have ability for the professional traders, the professional hedgers to actually use that information coming in to take positions, that allows the regulators to control the markets better. And people don't have to be there on the screen every moment because they are not supposed to trade so long for nothing, right?
Talking of news-driven developments and the markets, Ashish, you know, we've recently seen earlier this year and afterwards as well, these huge fluctuations in the Adani pack, for instance, based on some news-driven developments. Now, despite all the technology, despite all the warnings the exchanges introduces, margins and all of that, how do you think this will affect particularly the younger lot which is coming? What is the kind of way out of this to prevent them from these huge swings in the market?
So in a way, the volatility is going to increase across the world because the news flow is happening faster. The actions are happening faster because the technological changes are happening faster. So companies which were very small earlier are becoming large faster. Earlier, a company would take, say, 20 years to reach a large scale. But IT companies reach those scales in probably 10, 15 years. And some other companies are now becoming very large in 2 to 3 years, right? So that's where the news flow is going to be also faster. Volatility is going to be here to stay.
And RBI Governor Shaktikanta Das will unveil the fourth monetary policy of this fiscal year tomorrow after a 2-day review. Interest rates have been uniform since February, with the central bank biding this time on inflation. According to a majority of economists, the RBI will again keep its key repo rate unchanged at 6.5% tomorrow. But what are the challenges facing the RBI? Here's an excerpt of an earlier conversation between Business Today Television's managing editor, Siddharth Zarabi, and a panel of top economists.
What's the overall macro backdrop to this review that is currently underway?
So I think the macro backdrop has been more or less according to what the RBI had prophesied some time back. I think the only turning point has been the inflation numbers, because inflation for the second quarter has turned out to be higher than what the RBI had projected. So therefore, there could be some upward revision in terms of the Q2 inflation number. And that would also result in the overall inflation number for the year probably going slightly above the 5.4% mark. Maybe it will be 5.5%, not really very significantly different. In terms of growth, I think the projection for the for Q1 was bang on target for the RBI, and I see no reason for the RBI to bring about any change in their quarterly growth forecast, and this overall number of 6.5% will remain unchanged. There's, of course, some kind of uncertainty about the rural demand on account of the Kharif crop not being optimal, but that is something we'll get to know probably only after the harvest starts coming in from this month onwards. So if at all there has to be any revision in terms of GDP forecasts, it is something which could be taken on in the next policy. So as of for this particular policy, I think the macroeconomic indicators would be rather stable compared to what the RBI had projected in the last policy.
The high oil prices have also caused some concern and added fuel to the mix, really, Shogoto.
No, thank you, Siddharth. Thank you for having me on your show. So again, the troika of difficult conditions that we had seen in late 2022 seem to have again come back on the screen. So high US yields, the strong US dollar, and particularly high oil prices. All the fingers crossed, oil prices have come down, and given the inventory levels, expected demand and supply situations, hopefully it will not again go back towards the 95, which will be a blessing for us. But the global financial market tight conditions definitely create trouble for all emerging markets, including India. RBI has shown that it is relatively independent of the G10 central bank policies, but we can't ignore. I mean, nobody can ignore the policies of a very large set of economies like the US, the Euro area, etc. So it is difficult, but tomorrow, again, I mean, these will not be, the global financial conditions will not impact the actual policy actions.
Well, that's all on tonight's show, but do stay tuned on to India Today to catch all the updates from the world of general news. Many thanks for tuning in for now.